JD.com is a Chinese e-commerce company that also has a logistics and supply chain network that services other e-commerce businesses and business to business customers as well. It's quite an impressive company that looks really good on paper. I'd like to value the company and share with you what I think the company is worth. I don't own any shares in JD.com yet. I do own shares in Alibaba, and I'm really glad that I own shares in Alibaba. Chinese stocks this week have done really well. There's a lot of good news in China that caused me to want to look at more Chinese companies to see if it's a good time to buy these stocks as well. If you look at high level, the PE ratios of companies in China, they're far lower than the PE ratios for American companies, especially companies that resemble these companies here in the United States. So I'd like to take a look to see, hey, I'd like to pick up a couple more Chinese stocks, but I want to do my homework first. I'll see if JD.com is a good investment. I'll share that with you at the end of this video. I appreciate you watching this video, and I hope you've had a chance to see other videos on this channel. And I invite you to the live stream that I host each morning at 9 a.m. Eastern, 6 a.m. Pacific to open the stock market with other traders. Every trading morning, I try to have a live stream. And I'm asking you to support the channel by becoming a paid member of the channel. And the details are in the description of this video. You could find that link very easily. I hope you become a paid member. As a paid member, you will be given access to some of the tools I use in my investing, as well as be invited to investor calls, as well as be given priority on live streams to ask for particular stocks to be reviewed. And I could add those to the list of stocks we could cover in a session. So I appreciate you considering becoming a member and hope to see you on that member list soon. Chinese stocks in the year 2020 and 2021 were really popular. JD.com was trading above $100 a share, and investors were very excited at the prospect of buying a company that was going to grow really fast with one of the world's biggest economies. And the story hasn't changed. China continues to be one of the big economies of the world. So the valuation that JD had in 2021 of $106 per share is really understandable. What is not understandable is how far down the stock has been sold off. 78.9% drawdown. That is such a discount on a company. What I'm curious about is with this type of drawdown, did their revenue go down? Was the business operated poorly? Those are the questions that I have on my mind that I'll be answering in the video. Another way of looking at this is I've seen a lot of stocks go down like this that have healthy businesses. Remember, the company is not the stock price, and the stock price is not the company. Those are two different things. And sometimes the stock price is way too low for a business that has far more value. Now, over just 2 weeks of trading, JD.com is up a lot. It is up about 44%. And I showed the previous graph that showed it had a long way to go before it got back to $100 a share. So investors of JD really flourished over the last couple of weeks because the news out of China was very encouraging for stocks. Last week, the US Federal Reserve announced that they were going to lower interest rates by 50 basis points. And it really caused a nice rally the next day of over 2% on the NASDAQ and about 2% on the S&P. Really helped stocks. China this week announced their rate cut. But in addition to the rate cut, they announced a lot of accommodations for stocks. I believe they realize how low their stock price is being priced, and they really want stocks to do better. So they're doing things like lending corporations money to buy back their shares in an effort to bring up stock prices. They're offering banks loans, very nice loans to prop up their banks. They're really providing stimulation into the economy by sending citizens checks eventually. And they'll probably do more stimulation directly to businesses as well. That whole combination of things, and frankly, the equivalent to the Federal Reserve chairman in China was very enthusiastic about the new programs. The government's intent is to make their stock market go up. And that is what's causing a real big rally in Chinese stocks. I'm showing you the top 10 most valuable stocks in China measured by market cap. And these are all publicly traded companies. Alibaba was up 9.3% today. It was up over 9% on Tuesday. NetEase up 4.5%. JD, which we're going to look at today, up 13.5%. And I could go on and on. Everything is green and everything is going up substantially because I think it was a game changer to see the government pivot into really being pro-business and helping stocks really rally. JD.com has a market cap of $55 billion. That's in US currency. The revenue in US currency is $152 billion. That's a very high revenue amount. Net income, they are nice and profitable. Their PE is 12. And this company is in a logistics e-commerce business, similar to Amazon. We'll see what their growth rate looks like. But to me, on the surface, that looks like a really low PE. And that's after the stock's been up 27% over the 1 year chart. The PE next year is going to be even better, down to about 8 PE, which is really low. They do pay a dividend, not bad, 2%. Analysts think it's a strong buy. Now, the stock's really been rallying, so they're really saying that it's fairly priced. As we look at the financials for the company, they're showing good growth. They had great growth in 2021. Their growth has slowed down. Now, the economy in China was slow due to the government really shutting down a lot of their economy due to COVID. And they were probably a year behind the US in dealing with COVID. So they are lagging the US and getting over it, so to speak. But it's good to see they're still growing their revenue. That's decent growth. And if they can accelerate the growth, that'd be even better. When I look at their balance sheet is excellent. They actually have more cash than they do debt, showing that the balance sheet is in excellent shape. The cash flow, and it's all in the Chinese yuan. So I'm going to convert all those in my valuation model. I've done that already, and I'll show that to you next. The forecast that analysts are providing, there's 15 analysts covering JD. And they believe the company is going to do well, but the price of the stock has increased so much that at this point, they're just saying it's fairly priced. So the earnings per share are presented in the Chinese yuan currency, but it's still really favorable. They're showing growth in their revenue, as well as the earnings per share is going to grow in the future. I'll take this into account, convert it into US dollars, and put them into my model as well. The valuation of JD looks really good. I always knew the valuation of Chinese companies looked really good. Just the market wasn't buying Chinese stocks. Let's take a look at how valuable I think JD.com is. When I value their cash flows, they look great. I start with the trailing 12 months and grow it by, I think, a modest 6% the first 4 years. And then I grow terminal value by 4%. Their economy is going to grow at 5% for the next 3 years. That's great growth. And these guys are probably going to do better than 6%, but let me be conservative. I will also use a high weighted average cost of capital or discount rate to discount all those free cash flows. When I look at the net present value of those cash flows, I get to $134.8 billion. The cash on the balance sheet is $28 billion and the debt is $12 billion. So I'll take that away, but add cash. So I get to an equity value of $151 billion. Just great value out of those cash flows. The market cap's only $55.6 billion. So there's a big discount if you look at the cash flows. Earnings per share, I'm going to be very conservative. I'm going to take the earnings per share they expect to make in 2025, only go against a 12 PE, and only grow them by 5%. I think it's going to do better than that, but I'll use that as somewhat of a way to bring down the number. Overall, I think the stock is discounted by 106%, really getting back closer to where it was once priced, a little over $100 per share. I think the JD business is very desirable. They're an e-commerce company in a country that's really growing fast. 5% for a big economy is a very fast growth rate. Here in the United States, we're happy with 3%, and that's expected to go down to 2% next year, where China, they expect to stay around 5 for 3 years. That's excellent growth for an economy. So they're in a very good region, and JD is strategically located there. They're also coming to the US. The video I showed of that warehouse, that's actually located in California. So they're here in the US, they're expanding globally. So that looks really good, and they have more growth to go internationally. I think their methods of distributing product are excellent. They have a lot of competitive advantages there, and they have great size. All those things I like, mostly in the green and partially in the gray, because they still have competition, but I think they have a lot of advantages. So overall, I really like the company. I like the region, and Chinese stocks are beginning to work really well. Holy smokes, this week's been a positive one for Chinese stocks. So based on the valuation that I'm getting more than 100% discount on this stock, I'm going to start buying into JD.com. I already have BABA, but it'd be nice to have a second Chinese stock in my portfolio and own both companies and see which one is going to do better over the long haul. So that's my video on JD.com. I hope you found it interesting. Love to hear what you think of JD.com as well as Chinese stocks. Is this the beginning of something bigger, or is it just going to be a 1 week flash in the pan. We'll see. Thank you for watching. I really appreciate you supporting the channel. And again, I encourage you to think about being a paid member. You could get more benefits out of being a member, like getting access to some of the tools that I use, as well as invitations to investor calls, as well as being able to nominate stocks to review on the live streams. All those things I hope you find valuable, and I hope it compels you to begin your membership as a paid member of the channel. Thanks again for watching. Good luck investing.